How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 with my Vanguard brokerage account. Now, what a way to end the month here in April and entering into May with headwinds of volatility amid signs of the Federal Reserve intending to fast-track interest rate hikes, leaving investors on their toes in the week ahead. We are closing out the month of April with the Dow Jones losing 2.8%, the S&P shedding 3.6%, and the Nasdaq sinking by 4.2%. In regards to my personal account, it's sitting at $87,091.40, down by $9.19 since my last video. And exciting news here, it is time to go because as you all know, this type of volatility calls for the long-term value investor to be embracing the mayhem. So to kick us off this month, I want to run through 8 high-quality dividend investments that you can get invested into today that are currently undervalued, and then literally just kick back and collect on the returns to come. Before we dive in, go ahead, tap on that thumbs up button as it helps me grow this channel. And if you haven't already subscribed to the channel, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, without further ado, let's go ahead and dive right in. So welcome to May, and what a way to start the month with volatility greeting us on the very first trading day. It should all be embraced if we can afford to just sit tight. It certainly pays to be patient, but let's talk money moves because I have 8 dividend stocks I want to run through today, each of which are undervalued with expected growth to come, and most importantly, all reliable when it comes to their dividends. The very first stock I want to talk about is actually an energy sector leader. We have Chevron, ticker symbol CVX. It was originally founded in 1879, so it has stood the test of time and only continues to perform well year over year, meeting the world's demands for energy by exploring oil and natural gas while marketing gasoline and producing various chemicals. Chevron has a market capitalization currently sitting at $307.83 billion, a very firm balance sheet with proof in the pudding as its stock soared by 67% this past year. However, it is in fact on sale today, which is what I love to see, coming down off that 52-week high, falling from $173 to around $156. That's a 9.8% change, and with a PE ratio at 19.25, Chevron has attracted the Oracle of Omaha's attention, Mr. Warren Buffett himself, pouring money into the position, making it the 4th top stock within the Berkshire Hathaway portfolio. Now, Chevron is currently in a prime position to not only rebound but continue to grow as long as the sanctions against Russia remain in place or even intensify. Now, additionally, Chevron also announced plans for share buybacks in the coming months, which is all making analysts very excited for their future share prices, coming in at a median stock share price at $183.75 and a high stock share price at $213 per share. But until it reaches the heights of those prices, we can just count on Chevron's dividend. It is a dividend aristocrat with 35 consecutive years worth of dividend increases and a current dividend yield that is sitting at 3.64%. Now, jumping to the next dividend stock, I want to talk about Caterpillar, ticker symbol CAT. Caterpillar is the world's leading manufacturer of construction and mining equipment as well as diesel and natural gas engines. Caterpillar was founded back in 1925 and dominates its industry with a current market capitalization that is unmatched by any of its competitors at $112.83 billion. And even though Caterpillar is actually trading near somewhat of its all-time highs, it isn't exactly expensive with room for explosive growth to come. It recently got knocked around from $235 a share down to around $210 per share. That's about a 10.6% change, and with its PE ratio currently sitting at 17.8, its upside potential is stemming from exposure to oil and gas as well as transportation, agricultural, and mining industries as customers are going to need new equipment. Now, Caterpillar should in fact bounce back to a median share price of $240 a share, and analysts are expecting a high stock share price around $347 a share. Now, though we must take into account their dividend, which comes in reliably with 28 consecutive years worth of dividend increases, it is delivering a solid dividend with a current dividend yield at 2.08%. As for our third dividend stock of the day, let's talk Verizon, ticker symbol VZ. It is not only one of the oldest telecommunications companies, the industry's leader by a long shot. Since its founding in 1983, Verizon has built quite a reputation, which makes it a brand name and one of the strongest amongst its competitors, which all works to ensure customer loyalty and revenue growth. With an executive team that has proven to execute well over the years, Verizon has been able to generate a market capitalization at $194.44 billion. And with an announcement a few quarters ago that they were losing some subscribers and gave way to weak earnings guidance, their share price actually began to tumble off its 52-week high from $59 a share down to around $46 a share. That's a 22% change with a current P/E ratio at 8.7. I would actually think that there is no better time to begin a position with Verizon, especially with their latest announcement that they're going to be partnering with Meta to help create our new metaverse, all of which is exciting analysts in making for their median stock share price to be projected at $57 a share and their high stock share price of upwards of $72 per share, which they should easily crush as soon as they complete their 5G network expansion and configuration. But we're here for Verizon's dividend, which again is just another reliable dividend investment with 15 years worth of consecutive dividend increases and their current dividend yield sitting at 5.28%. On to our fourth dividend investment of the day. I want to talk about Pentair, ticker symbol PNR, which is an American water treatment company that was founded back in 1966 and has remained an innovative leader helping people move, improve, and enjoy their water, serving residential and commercial customers. Now, Pentair, in my opinion, is one of those under the radar, not so sexy yet incredibly lucrative investments, as their services remain a necessity for us all, allowing its market capitalization to grow just over $8 billion at $8.39 billion. And so when we see its stock share price falling as we are right now from its 52-week high at $80 per share down to around $50 per share, creating about a 37.5% change, Pentair becomes a very worthy stock to add to our watch list with their current P/E ratio at 15.54. And analysts only foreseeing a rebound and then some growth to come at a median stock share price of $70 per share and a high stock share price of upwards of $100 per share. But we're here not just for that comeback and growth, but their dividend as well, with their current dividend yield at 1.62%. Now, if you're not such a fan of water, perhaps a latte will do. And I want to talk about Starbucks, ticker symbol SBUX, which I know I don't need to tell you all about Starbucks. It's become the world's largest, most beloved coffee house chain since its founding in 1971, amassing an empire of over 33,000 locations and operating in 80 countries. Its market capitalization is at $85.86 billion. And although Starbucks has certainly been taking a beating from inflationary pressures, leadership change, and unionization, as long as investors troubled with the suspension of their share buybacks, Starbucks isn't going anywhere anytime soon, which is why I'm happy to actually see its stock share price come down from its 52-week high, from $126 per share down to around $74 per share. P/E ratio now sitting around 20.13. Yes, there's certainly a lot of negative news popping up for Starbucks, but it's important to note that the rewards program is as strong as ever, and they're continuing their efforts to build out more drive-thrus and grab-and-go stores, which is all making that 40% change in their stock share price short-lived and well worth the investment. Recent analyst expectations coming back to a median stock share price at $105 per share and a high stock share price at $130 per share. Now, of course, we're here for that dividend of theirs with their current dividend yield sitting at 2.56%. Moving right along, our next dividend stock of the day is VF Corporation, ticker symbol VFC, which is an American global apparel and footwear company that was founded back in 1899 and has since left a mark on the world with some of their iconic brands from Vans, Timberland, the North Face, Supreme, and JanSport, to name a handful of them. They have been able to amass a market capitalization of $20.22 billion. Now, as they battle inflation as well as the need to further diversify their markets, VF Corporation stock tumbled down from $90 per share down to around $52 per share, creating a 42% change, with their P/E ratio at 14.64, making for a ripe opportunity to go right for the steal of a deal. Their brand names are, in my opinion, not going to be going out of style anytime soon, so analysts seeing a rebound to come with their median stock share price jumping to $69.70 and a high stock share price at $97 per share. Now let's talk about reliability, because VF Corporation has earned itself the title of a dividend king with 50 years of consecutive dividend increases and a current dividend yield at 3.81%. Next up, jumping into the financial sector by way of talking about Rowe Price, ticker symbol TROW, which is an American global investment management firm offering funds, advisory services, and account management for both individuals and institutions. Rowe Price Group was founded back in 1937, has certainly established itself as a trusted financial industry leader with over $1.6 trillion in assets under management and a market capitalization sitting at $28.03 billion. Now, although many financial institutions are suffering Rowe Price has a vast majority of their assets tied to the stock market, more specifically the Nasdaq. So you better believe they have been and remain pretty hard hit during this volatility, falling from a once high of $224 per share, where they now sit around $123 per share. That's a 45% change. With their PE ratio sitting at 9.38, I'm certainly sounding that buy alarm. Analysts are as well, as they're expecting a bounce back in their share price to a median stock share price of $142 per share and a high stock share price at $170 per share. As that dividend investor, you get to enjoy the reliability of Rowe Price's dividend. When it comes to their dividend, they've been shelling it out for 26 consecutive years, increasing it year over year, and their current dividend yield is sitting at 3.71%. Now, last but not least, our eighth stock of the day, let's talk about Stanley Black & Decker, ticker symbol SWK, which is an American Fortune 500 manufacturer of industrial household tools, hardware, and security products. After its founding in 1843, Stanley Black & Decker triumphantly began leading the industry as they brought some of the most trusted brand names to the market, from DeWalt to Craftsman and Paladin, all helping to generate their current market capitalization that is sitting at $18.14 billion. However, amidst all the near-term headwinds of cost inflation, supply chain issues, its stock plummeted from a 52-week high, falling from $225 a share down to around $119 per share. That is a 47% change. Their PE ratio is at 14.83, and this is just another opportunity to seize while you can. Now, analysts foresee their stock soaring right back in due time to a median stock share price of $159.50 a share and a high stock share price of $250 per share. Now, like I said earlier, it pays to be patient, and while remaining so, we can collect on Stanley Black & Decker's dividend. They've been paying it out for 54 consecutive years, increasing it year over year, so another dividend king with a 2.27% dividend yield. Now, YouTube, that is it from Chevron to Caterpillar, Verizon, Pentair, as well as Starbucks, VF Corporation, Rowe Price, Stanley Black & Decker, the 8 dividend stocks that at a bare minimum we all should be adding to our watch list, watching throughout the month of May. Now, I'd love to catch your thoughts on these investments if you have them within your portfolio, or if you plan on investing in any of them. Drop those comments below. I'd love to read through them. And just keep in mind that I'm not a financial advisor, so always do your due diligence following my videos and prior to making any investment decisions for your own personal portfolios. Just before we get going, tap on that thumbs up button and do us both a favor at this point in subscribing to the channel. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, I will see you all in the next video.